I thank the gentlelady for yielding. Mr. Speaker, this House recently passed the Financial Markets Regulatory Restructuring Bill, which in essence, unfortunately, will create a new federal insurance program or bailout authority for large financial companies that take on too much risk. I wish we would leave, given the state of the national debt, I wish we would leave the safety net where it currently is under federally insured depository institutions. And instead, ultimately, I fear we will one day be looking at taxpayer subsidies to cover the likes of Goldman Sachs, AIG, Lehman Brothers. I wish we had learned our lesson from the National Flood Insurance Program, which we know was supposed to never require any taxpayer funds, any general revenue. But unfortunately, we know today already $19 billion is owed to the federal taxpayer. And we look at the other federally administered insurance programs, Social Security, long-term deficit of $15 trillion, Federal Pension Benefit Guaranty Corporation, debt of $22 billion, projections of $34 billion by 2019, federal crop insurance, Medicaid, the list goes on and on and on. This bill adds to the tab, and the Congressional Budget Office has projected this bill will increase spending by roughly $500 million over 10 years. Even by Washington standards, I hope we still consider that to be significant funding. Now, I wish the federal government wasn't in this business, but we are in this business. And if we are in this business, we have to ensure that we are not subsidizing and incenting people to live, essentially, put them in harm's way, and put them in harm's way at taxpayers' expense. If they're going to put themselves and their property in harm's way, that's the decision they need to be making. But we shouldn't be a party to incenting them to that. And so we still have a program that over-subsidizes certain properties, including condos and vacation homes. And we're asking people in my district, the factory worker in Mesquite, Texas, who may be making $50,000 a year, to subsidize the flood insurance of somebody who may be making $500,000 a year. Maybe because they have a condo on a beach. That's not a program that's particularly fiscally sound or one that I believe is fair. I certainly want to thank the chairman. I want to thank the ranking member for their work. And there are a number of improvements in this legislation that will help improve the program. I want to thank the chairman for incorporating a modest amendment I offered in 2007 that would at least require the NFIP to conduct a study within the next 6 months of how do you end up repaying the taxpayer at least over a 10-year period so they can recoup their losses on a program they were never supposed to bail out in the first place. I appreciate the fact that the underlying legislation will raise the annual cap on premium rate increases. I appreciate the leadership of the gentleman from New Jersey, Mr. Garrett, who offered an amendment that was incorporated that would eliminate subsidies over time for homes that are sold to new owner and phases in actuarially sound premiums on second homes. There's also language in here that will impose minimum deductibles for all insurance properties. All of these are several steps in the right direction to help ensure that the taxpayer doesn't suffer further losses. But unfortunately, the bill really doesn't do anything to deal with the current almost $19 billion of funds that are owed to the taxpayer today. Nothing in the bill will help recoup that particular loss. It delays the implementation of actuarial rates, which I think, again, puts the taxpayer in further harm. It does not phase out the taxpayer subsidies. We still have insurance at subsidized rates, creating perverse incentives that encourage people to essentially live in harm's way. And just like Fannie Mae and Freddie Mac, which have already cost the taxpayer $150 billion roughly and counting, those programs ultimately need to be returned to competition. So does this program ultimately need to be returned to market competition. Now, I know we can't outlaw hurricanes, we can't outlaw floods, but we can at least make sure that the factory worker in Mesquite, Texas, in my district, doesn't have to keep picking up the tab over and over. And very importantly, this is a program that authorizes almost $500 million in new spending on an outreach program when one already exists.